Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, 4th day of August, 2015, and this is the daily report for gold and silver. We have a mixed bag in the precious metals markets, and depending on how you look at price change, whether it's spot or a Forex or a COMEX, you do have the precious metals trading slightly higher on the day, all with the exception of platinum. We will take a look at platinum in a little while. That's currently off about $7. When we look at gold through our COMEX eyes, off about $1.70 on the day. It has had a high of 94.40 and a low of 80.20. That low is really important because that's the low that we really want to see breached. Of course, when we look at the same market through the eyes of a spot market, we're trading up about $2.50, but trading roughly at 88.39. Lows and highs are roughly the same on the day. But what's really important is the fact that when we take into account the strength of the US dollar today, which really has picked up some momentum and steam, you actually lose approximately $5 in the price of gold. Normal trading right now is really bringing up about $6. This is according to the Kitco Gold Index, putting it up about $1.10 on the day. But the real story is that we are in essence unchanged to up a little bit on the day. But even more importantly is the fact that that 1080 is still a mark that we would like to see breached. Silver also trading higher on the day, nominally so, up less than 1/3%. It is above 1450, but ever so slightly. 1456, our current print, with a low of 34.50 and a high of 62.5. We'll touch on silver in a little bit. I want to start today's show by taking a look at that one particular area that we've been talking about, and that's once again 1080 in terms of a price point with gold. We'll go ahead and we'll blow this up. In some ways, we could be looking at some sort of bottom activity in the market. We could have completed actually a wave 5 out of 5. But since that, we've had no fireworks, no sparks, and the market has really been almost deadpan or dead in the water. When we take a look at, and we're just going to kind of look at the bodies, and once again, remember that the real bodies are just simply taking away the extreme highs as well as the extreme lows. So the lowest body is going to probably be this one right in here. Let's try to line it up as best I can. And so when we take a look at the real bodies over the last, call it week and a half to 2 weeks in trading. And of course, these real bodies represent where the market opens during that day and where it closes, taking away the extreme highs and lows. You can see that the range we're looking at is extremely, extremely flat. 1100 on the high, and the low is just above 1080, call it 1082, 1083. You have a couple of extreme lows sitting in here, but even the extreme lows, with the exception of this low here, which I believe went to maybe 75, 74, 76, somewhere in that area. But aside from this particular mark, which happened towards the end of July, we've not had this market venture into this area. One. Two, the second thing that really stands out when I look at the data here is the fact that we have alternating candle color. We go green, 2 days of red, meaning an up day slightly, slight down day, slight up day, slight down day. And as you can see, they're pretty much alternating all the way through. That's a real easy way just to make them green. And then you can see quite easily how these things alternate almost on a daily basis. So what can be made of that? Well, as we talked about before, the main thing that we can glean from this information is the fact that we have absolute consolidation in the market. We've also talked about the fact that absolute consolidation in the market could, in fact, move us into two different modes, whether it breaks to the upside or downside. The other thing that we're looking at is, although the marketplace itself has not really given us a whole lot in terms of being able to draw a series of lows, they are ascending lows, except for when we compare this low to this low to this low, we've had a series of higher lows. We can't make the same case for the highs, but if we can extrapolate this particular angle, which is the downward angle, and extrapolate it out, we do get this kind of pennant formation. We almost get one here, but it's really a stretch of the imagination because, quite honestly, traders, we've not seen the range in the market. So when we've got a marketplace that's trading with that kind of tight consolidating range, we have to really go back to the drawing board. And when we go back to the drawing board, what we can say in terms of probability, and of course that doesn't mean that's what the outcome's going to be, but in terms of probability, genuinely, when you have a market that's in a major decline phase, a corrective phase, such as we got here, and then you get this kind of sideways movement, and traders, compared to the sell-off that we got, this sideways movement right in here was still tracking when you consider 1302 as the top. That's our 50% retracement, and 61 was 1156. Again, you get a series of lows in here, you get some highs in here, but it did break, and when it broke to the predominant trend direction. That should be, in terms of straight probability, just on a technical basis, roughly at about 60 or 70%, that there's a higher probability that when the market breaks, it will break to the prevailing trend that existed prior to the consolidation. Now, that certainly doesn't mean that that always happens, and at some point this market should in fact bottom, and when it does, we can expect it to rise a bit. When that will happen, traders, really is anyone's guess. Now, traders, the real story, and we haven't looked at this market in quite some time, but it is part of the precious metals group and therefore part of the gold forecast, is platinum. Now, platinum's a much thinner market, even thinner than silver in terms of trading, but when you take a look at the actual market moves that we've seen, you can see dramatically under $1,000, under dramatic pressure. This being a daily chart, and this is what I find interesting, you absolutely get some sort of a hammer-esque kind of a formation in terms of the candlestick, but it's opened well below the close of the prior day. It traded to a new low, if you consider this low here, and you can almost match it up with this low here. I believe this low here is sitting at, let's see if we can just get that, at about 946. We have this low here at about 945. So you can see it's pretty much an equal low, but equal by not very much. Is platinum going to continue to drop? That market, you can see how thin it trades by these open to closes here. If we compare them to a gold chart, you're not going to see the same type of move, but then again, gold has also been trading sideways. So I'm not convinced that this final sell-off in platinum's over, but it's certainly something that we're going to want to look at over the next couple of days. So traders, let's take a look at silver. I know we haven't over the last couple of days. I mean, the best that I can make of this market is, like a couple other markets that we're looking at, we definitely have a downward bias. There's no doubt about that. These channel lines are taking us to lower pricing. We're staying within a very narrow and defined range, but there's a much greater range in terms of the highs to the lows and the percentage change to silver price than there is in gold. However, when we hit the top of this channel, we tend to trade lower. We do have a slightly update today, and that's coming in at around midpoint. I'm still going to recommend that we sideline on silver. I don't see a real trade in here. I think that if the market does want to find support and continues to drift lower, you're going to have great support at around $14 per ounce, but that's on a technical basis. Right now, I see it just channeling lower, finding support at 14, and from there, we'd have to see if market has enough momentum to flip back up, because we need a basic fundamental shift for these precious metals to take off. And traders, we know that that can happen at any given moment, and it can happen without any kind of advance warning. But nonetheless, when we look at the markets based upon the technical studies that we use, I can't see anything but this market probably drifting lower. This has been Gary Wagner, wishing you, as always, good trading. Talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.